Well, based off of this chart, you guys can see today is not a great day for the stock market, and there is a couple reasons for that, but we also do have big data that comes out tomorrow. You do have big boy old Fed Jerome Powell that speaks tomorrow as well. Some things we do need to acknowledge here in this video, so let's dive straight into it. I don't want to waste any of your time. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section as well. If you guys want to come trade with me live in real time, link down below in the pinned comment. But let's dive straight into all of this info. So first things first, if you guys are unaware of what is causing today's down move, directly data related, you did have the Richmond Fed survey fell negative 19% in June. And essentially what this is, it is the Federal Reserve Manufacturing Survey. Manufacturing, recession, kind of sound like two peas in a pod. Well, for shipments, you're seeing a negative 29% print versus negative 14% prior, so that is worse month over month. Capacity utilization a little bit better month over month, negative 9% versus a negative 11% print for the prior month. And the volume of new orders, I think this is something that is really clapping the markets. This and shipments, negative 38 from a negative 16 prior. So you're not seeing a volume of new orders coming in good at all, or these shipments not coming in good at all. So this is not a good sign for a recession. You can also see that Cathie Wood says the US is already in a recession, and this is the main headline here on CNBC, and you are seeing people talking about a recession of which the likes you have not seen in many years. You have to go back to, COVID crash in 2020, and that was a very brief period in time to get these kind of fears about a recession. And I think it's clear we are already in a recession, and we do have data that comes out tomorrow, which could make people a little bit more fearful than not. So for Q1 GDP, the final number, it does come out tomorrow, and you can see it's estimated to come in at the same it came in for the last estimate, which was negative 1.5%. So depending on what happens tomorrow, you could see people get a little bit more fearful about a potential recession, but we already know a negative 1.5% number is what is expected. So I don't think anything too crazy will come out of that, but you do have Fed Jerome Powell that does speak tomorrow at 8:30 in the morning. I believe this is Central Time, so it should be 9 a.m. Eastern Standard Time, and that will move the markets in a bigger way than not. And I'm sure the Fed comes out and says, yeah, the same thing he's been saying. Essentially, he's going to raise rates to oblivion as long as inflation is high, no matter what happens. And given the GDP final numbers that come out for Q1 tomorrow, given Fed Jerome Powell, if he keeps saying those statements that he's not going to slow down until inflation comes down, then that could mean for a pretty substantial red day tomorrow. And I think that's why you're seeing such a red day here today. It's a lot of this anticipation for the Fed, for this GDP final result that comes out, that is having a lot of people just selling off stocks here today instead of waiting for bad news tomorrow, which could mean a bounce for tomorrow, or it could mean more substantial pain to come. If we look at the S&P on the 30-minute or the 15-minute candlestick chart, you guys can see that we have had a pretty decent move from the bottom as of so far, from 362 all the way up to 393. That is a move of roughly 8.5%. So we have given back about 1.43% as of today, and today in pre-market, or just when we started trading, the first 10-15 minutes of the trading day, we actually did hit the high of where you can see of these recent highs, and you have been selling it off throughout the whole entire day. It has been just one straight move to the downside ever since this Richmond Fed manufacturing survey did come out, as well as you did get the S&P Case-Shiller Home Price Index. And this is the main headline for that. It says home prices increased, slowed in April for the first time in months. S&P Case-Shiller shows Prices rose 20.4% nationally in April compared with the same month ago period, according to the S&P CoreLogic Case-Shiller Index. In March, home prices grew 20.6%. The last slight deceleration was in November of last year. In a change from the last 5 months when most of the 20 cities saw month-to-month price gains, only 9 cities saw prices rise faster in April than they had done in March. So not a lot of cities are still appreciating value as far as home prices are concerned. Good thing is a lot of people have equity built into their homes, so if they need to sell for whatever reason, a lot of people are not going to, have to sell for less than what they bought their homes for. This is actually the most equity in homes people have had since 2011. So you're definitely positive in that regard, but still, when your largest sector of your economy, which is housing, starts to show signs of increasing weakness, that's not going to be good for the odds of recession. That's not going to be good for the average person, and that is not going to be translated into a good thing for the stock market. Now, that's really it. That's what is happening for the day. And I think a lot of people are just selling off stocks, like I said, in anticipation for tomorrow. And you do have the Fed, like I said, GDP data that does come out, the PCE prices quarter over quarter for final Q1 as well. A lot of this finalized data that is coming out tomorrow. And then on Thursday, you have more relevant data, which is personal income month over month, personal spending month over month, initial jobless claims for this last week, PCE price index month over month and year over year. That's the main metric of inflation the Fed likes to pay attention to. So that will be important for obvious reasons. Personal income, important. Personal spending, much more important in my personal opinion. And that is really it for Thursday. As far as Friday, you have ISM manufacturing PMI. Now, you really don't have any other Fed speakers as well besides Fed Jerome Powell tomorrow, and I think that's why he will hold so much weight to the markets, and he will really dictate which way the markets do move. Now, the biggest thing we will have to contend with next as far as this whole market crash scenario is earnings, and earnings are going to start coming out here very shortly in the next couple of weeks. If your largest companies in the world really butcher earnings that control the markets, your Apples, your Microsofts, your Amazons, your Googles, even your Teslas of the stock market, your trillion-dollar market cap companies, that's where you can really see a big flush out to the downside, because a lot of those companies have held up relatively well compared to other companies that are at their COVID crash lows. Guys, this is the worst stock market by far you will probably ever experience. And some of the best performing stocks, I know that's really relative here because pretty much everything besides energy and some healthcare stocks are down on the year quite substantially. Even some of those names I just mentioned down over 20%, still performing relatively well compared to the markets. Once those guys go, that's it. That's the flush out. That's where, excuse my French, that's where shit hits the fan, and that's where you get an earnings recession as well as a recession on paper coming as early as July 28th. So be prepared for this. It looks like the Fed might crash the markets again tomorrow. It looks like Marko Kolanovic from JP Morgan, he expected a 7% rally this week. It looks like that's probably not going to happen if I were to put on my wizard cap here and try to see into the future. Now, as far as what is going on with AMC stock for the day, AMC is down about 3.5%, still above that $13.53 mark, which is the 50-day moving average. So that is bullish in my personal opinion. You want to stay above that, so potentially we can retrace higher coming tomorrow or just over the next couple of days. That's the main factor to watch as far as the technicals are concerned. MACD still very bullish. The RSI pretty neutral at 53.79. Now, taking a look at the Ortex data, you can see the cost to borrow max is at 58.08%, a sharp increase on the day. Cost to borrow average at 32.43%, also a sharp increase on the day. Cost to borrow minimum going up slightly at 4.72%. The dollar amount that is short of AMC stock is $1.55 billion. Estimated short interest of free float 21.25%. Free float out on loan 36.16%. Shares out on loan 186.39 million, days to cover at 3.75, and 100% share utilization. That's obviously not too crazy. We've been at 100% utilization for a very long time now. And if we could see a lot of put activity coming in over the last couple of hours here since the last video, it's totally flipped around. We were over 60% positive order value. Now you're at a 10% positive order value for the day. 13 orders totaling almost $4 million so far. So you're definitely seeing a lot of negative options coming through, and that is forcing the market makers to essentially go out and issue these IOUs and to short stock into the open markets. Some of these orders quite substantial. $265,000 order right there, $128,000 order right there, $128,000 order right there, $35,000 order, $156,000 order, $369,000 order, $91,000 order. So when you see a lot of option activity that is really negative on AMC stock, it doesn't even matter if there's not a lot of shares available to short. The market makers are legally allowed to short stock when there is a lot of put options placed on a security. So that is currently what is happening today. That is what is dictating the actual price movements of AMC. And I think it's a good thing that AMC is only down 3.5% when the NASDAQ is down over 2% on the day. For this week, about 33,000 calls that are in the money, 117,000 calls that are out of the money. For July 15th, about 28,000 calls that are currently in the money, 435,000 calls that are out of the money. Nothing has really changed in a substantial way as far as the option activity for the day and the open interest that we are seeing. Still a lot of potential buying power that will come in if the price of AMC stock can make a move to the upside. You do have about 92,000 puts that are currently in the money as well, which can help us to get that move to the upside as the puts run from into the money, out of the money. That is very bullish, and that does constitute buying power from the market makers as well. Now, Max Pain, $13 per share by the end of this week. We'll see if that does happen. We really do want to stay above $13.53 per share to close out the day. If that happens, it's going to be incredibly, incredibly bullish. So that is going to be all for this video. That's what you guys need to know. It looks like the Fed is kind of starting to crash the markets a little bit here today. Let me know your comments, questions, or concerns down below in the comment section. Like the video, subscribe to the channel, and if you guys want to come trade with me live in real time, link down below in the pinned comment, and get your free stocks with Webull, Moomoo, and Public. Thank you guys for watching, and I will see you in the next one.